Hi everyone, we have Brian Adams here today. It's a real pleasure to have him on the webinar. This is Finance Meets Real Estate. As you guys know, we do weekly live webinars every Tuesday. So we've had some great guests. We have a great guest here tonight. So as you guys see on the screen, he's gonna talk about how to reverse engineer your pitch to accelerate your fundraising forward. So Brian Adams is the founder of Excelsior Capital, president and founder, and he has a real estate. It's a real estate private equity firm that owns and operates high quality multi-tenant commercial assets. So they have office assets, and they've been expanding into the medical commercial space as well. So they purchase assets in the 10 million to 25 million range in emerging secondary markets. So prior to forming Excelsior Capital, Brian co-founded Priam Properties, an institutional real estate private equity sponsor, and provide leadership and direction for the firm. So he has also served on the board of Serum Partners, a single family office investing across private and public assets. He holds JD from Suffolk University and his Bachelor of Arts from Wesleyan University with honors. It's a real, like I mentioned, it's a real pleasure to have him on the show. I think we had a brief discussion before. We tend to have more multifamily speakers today, so I'm extremely interested to hear, like different approaches and strategies that work in the REST series space. So if you guys have any questions, feel free to post them on the chat, and I'm gonna relate them at the end, and we're gonna have a Q&A at the end as well. So with that, I'm going to pass it on to Brian.
Hey, thanks for having me, and thanks everyone for joining this evening. So this presentation is really about how to raise capital as a first-time sponsor for commercial real estate, but it really applies to any entrepreneur that's out there for the first time trying to capitalize their opportunity. And, I put the content information in the chat box. You can actually go to the website and download this presentation. It's free. The reason I put this together is I've been doing this 11 years. The number one question I get asked is, how to raise money. It's a very large obstacle to the business, right? It's a hard barrier to entry for a lot of folks. So hopefully this is helpful. We're going to run through it pretty quickly. One of the things that I'll hit on during the presentation is people have very limited attention spans. So we're going to hit this all pretty in short fashion. One of the things I'll say is that I think a lot of people on LinkedIn or whatever social media platform talk about how capital raising is a relationship business, and they use a lot of cliches and a lot of broad strokes. This is very granular. So this will actually give you a playbook of what to do 30 days out from your first raise or 6 months out from your first raise, and hopefully give you kind of step-by-step opportunities. All right, so let's get started here. How do I? Yeah, okay. So we're all in the commercial real estate business.
Everyone, this is Finance Meets Real Estate. We have Johnny Wong here today. It's a real.
And the reality is that it's a very capital intensive business, right? So what I've often seen people really struggle with is they put the capital raising, marketing, sales component, business development component of their enterprise on the back burner. They don't put the time and resources into it. And unfortunately, that's going to be a fatal mistake for you. So you just have to come to grips with the reality that you're going to be constantly raising capital if you're going to be in this business for any long period of time. And again, in my experience and opinion, you cannot outsource this, right? Anybody that says they can bring in a third party to help you raise money, I think that's a very poor decision to make. You need to be the chief sales officer or you will fail here. So some of my bona fides, really just to give you some context here, Over the last 11 years, I've raised about $150 million, probably more than that at this point. We've had a really big year. I have roughly 600 active investors today. And I've done everything. I've gone from $10,000 checks from my parents to $10 million checks from, institutional private equity groups out of New York, and everything in between. We've recently done some things that we can get into later in the Q&A if you want, but we've really been able to accelerate our capital raising processes through documented systems that we've incorporated. And this is a little outdated. I'm not sure what deal this one refers to, but we launched a deal Friday, $2.7 million raise at around 2:30 p.m. Central Time. And we were oversubscribed by 6 o'clock that evening. So, for what it's worth, this is how I spend all of my time, is figuring out how to efficiently raise capital and how to efficiently acquire qualified leads into my funnel and convert those leads into investors. So this is what I see a lot. And this was certainly the case for me when I first got into the business, is you're a smart, energetic person, you're bootstrapping your business. Maybe you were at a firm that was tangentially related to real estate or financial services. And you think to yourself, man, real estate's a terrific business. I know, Bill and Barbara down the street have done really well taking down single family, multifamily, commercial, whatever. From a standpoint of people being able to do real estate deals, it's a very low barrier to entry business, right? Anyone can go out there and find an opportunity. The problem is I see this fact pattern where somebody spends a lot of time finding a wonderful opportunity, and they do all of the market research. They talk to brokers, property managers, they scrub the model, they spend a ton of time on the deck, and then they go out to their friends and family, right, for their first opportunity. And then they go to them and they say, hey, I'm really smart. I've worked really hard on this opportunity. I think it's going to be a great deal. You should do it. And unfortunately, the ego pitch does not work very well. You can ground and pound it, and you can try to cram it down people's throats. Your conversion rate will be pretty poor, but if you want to go that route, you can. Unfortunately, even though I think the biggest myth in the business is you will raise on a good deal. Completely false, right? And in this business, in the commercial real estate industry, unless you can raise capital around your opportunity, you don't have a business. You've got art, right? It might be a beautiful thing that you stand back and say, man, this deal is wonderful. But if you can't raise capital around it, you can't acquire it. It's not a business. So we went through this ego pitch. It's very difficult, in my opinion, to do it this way. And honestly, if you're in this business long enough and you do these conference calls, these webinars, or these pitch events, you can tell right away that you probably have around 12 minutes of people's attention. And a lot of these sponsors and GPs spend 5 to 6 minutes talking about themselves. And honestly, put yourselves in their shoes. If you're on the other side of the table getting that pitch, the only thing you're thinking that whole time is what's in it for me. Like, nobody cares what grade school you went to, what you did historically, track record. It's not resonating with that person across the table, I promise you. So what do? Put your ego in the back seat, and let's talk about being empathetic here, right? So this one is really creating a product and a service that has a solution set to your investors' problems. So instead of you going out and talking about how great you are, how great the deal is, you're saying to them, I understand who you are and what you do. I understand your problems. And here, I'm going to bring you a product and a service type that will solve those issues for you. So best line I ever heard in terms of the fundraising business from a mentor of mine: if you want advice, ask for money. If you want money, ask for advice, right? So what that means is you go out and you hard pitch your uncle right out of the gate with a deal without prepping him or talking to him really beforehand. He's probably going to go, well, let me tell you, multifamily is really hard right now. Cap rates are tough, blah, 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 blah. Let me give you some advice, right? But I'm promising you, if you go to that same person, you ask them for advice, that's going to be the best way to lead to eventual conversion and the right way to pitch. So let's get brass tacks here. How does this actually work? Before you find your deal, before you try to raise on it, make a list of 100 people. And you start from one being the most affluent, sophisticated person you know in your friends and family, a first degree connection, somebody that will actually take a meeting with you, that potentially could give you money. And you write a list of 100 people going from the most affluent, sophisticated to the least. This is not a judgment about if they're a good person or not, but you're in the capital raising business. So you have to put labels on people in terms of where they stand in the prospect list. So you go down that list, right? And you start with the most affluent, sophisticated, experienced investor. And you go to them and you say, hey, listen, I'm thinking about getting into the real estate business. I think there's some attractive opportunities that I have access to, but I don't really want to talk about the deals right now. I want to ask you a bunch of questions. And this is where you need to have 2 ears and 1 mouth, because ideally you're spending most of this time listening. So you ask this person, what are the biggest problems you face in your financial life? Like, what would solve the issues for you, right? Or is it access? Is it cash flow? Is it tax loss harvesting? Whatever. What are the headaches right now that you're experiencing? What are the problems that you have every day? And if you have invested in private deals before, what did that look like, right? I mean, what would the most compelling opportunity be for you right now? And there's no detail too small here, right? So if they have invested in commercial real estate in the past, what were the things that they liked about it? What were the things that they didn't like about it? If they could have the perfect investment, what would it be? Would it be a fund? Would it be a standalone LLC syndication deal? Would it be super cash flow intensive? Would it have a huge IRR or a big multiple on the back end? Would it be a short-term hold, long-term hold? Did they care about cost segregation analysis and depreciation past the year of their K1? What would they want the investor relations to look like? What reporting would they expect? How often would they want distributions? Do K1s coming in a timely fashion matter to them? Paint the picture, right? And the whole time we're just writing things down. You know, would they want it to be in their backyard? Would they want it to be somewhere else, etc.? So if you do this diligently, you can probably knock out 100 of these conversations, especially now that we can do Zoom, in roughly 30 days. And so you compile all of this into a list, right? And this is where it's going to be a little bit challenging, because maybe you personally think mobile home park development is the best deal going right now. The issue is, if none of the people on that list of 100 folks that would take your meeting or take your pitch care about mobile park home development, it doesn't matter. It's irrelevant to you. What you need to do is create a product and an investment that you know these people want, right? So you form your product in response to the feedback you got over those 100 conversations. And then once you have that, you've put everything together, you go from a person 100 at the bottom of the list all the way to the top of the list to 1. And you start at 100 as opposed to the first best prospect, because you don't want to waste your pitch when you just come out of the gate. It's going to be pretty clunky. It's not going to be smooth. You're not going to have answers to all the questions. You're going to get pushback on certain things. You're going to forget certain parts of your pitch. That PowerPoint's not going to be in great shape. If you have a partner, you've got to figure out who does which part of the pitch at what time. So you need to work out the kinks. So you don't want to waste your best prospects when you aren't ready yet. So you start at the bottom of the list. Hopefully by the time you get to 50, the pitch is in pretty decent shape. And then from 50 to 1, maybe you're in a place where you can get some real conversions. And so that's what you do. Instead of going, I found this great deal, I'm really smart, you need to do this. It's, hey, Susan, I took all your advice that you gave me and I found this wonderful deal. It seems to check all the boxes for you. I've already taken care of legal entity, the investor relations, the reporting, what it's going to look and touch and feel like, what the yield's going to be, what the fee setup is going to be. Let's take all that off the table because I've already addressed it, because I know the issues that you have with those things. Let's talk about the opportunity in front of us today. So that is the right way to pitch, in my opinion. Now, this can be really challenging for some people, but you have to be honest with yourself what these folks can allocate to your deal. So when you first talk to them, would they put $10,000 to work, $100,000 to work, $1 million to work? Because I've seen this oftentimes where a first-time sponsor finds a $50 million development deal in Dallas, Texas, and it might be the greatest deal in the world. But if his or her network only has the ability to write a couple $100,000 of equity on a check, it doesn't matter. It's just not going to work, right? So you have to be realistic what you actually think you can raise. And that can be challenging for a lot of people. And even for me, you know, I work with individuals and families, and I'm good at pitching them, right? I've got a good track record of converting them. I have a very good sense of what they want within my network. It doesn't mean I can go to a pension plan or an endowment or a European insurance company and pitch them. I don't know what their challenges are. I don't know where they spend time. I don't know what the problems are. I don't know what the product should look or feel like. It's not going to work for me, right? So you have to be realistic with who you know and who's going to take that meeting. And the other thing is you've got to be honest with yourself about what your conversion rate is going to be. For me, I've got 5,000 qualified leads on my distribution list. Typically 500 open my emails. Typically 50 end up coming in on the deal. So you're talking about a 1% conversion rate, and that's fairly market. So when you think you've got to raise $1 million and you have 100 prospects, you do the math. Your conversion rate's got to be very, very strong, and people have to write some pretty decent sized checks right out of the gate. So, you know, just have a little bit of a reality check before you start doing this. And I think what COVID has taught me more than anything is that even though I think I'm great and my deals are wonderful, my investors actually don't want to have a painful 2-hour steak dinner with me to talk about the deal, right? So I've empowered my investors. I've respected them enough to create pitches and marketing materials that allow them within 10 minutes to decide whether or not they want to do this specific opportunity. And that's where technology has really helped a lot of things. Drone footage, video, DocuSign, PowerPoints, Dropbox links full of all of the materials and diligence files that you want. What's cool about what's happening right now in our space is things like this, podcasts, social media. You can let the world know who you are and what you do, right? I'm Brian Adams. I do 3 things: give individuals and families access to direct co-investments, solve for double-digit cash on cash yields, and give people all the tax benefits that come from direct real estate ownership. Boom. Those are 3 things that I do. You can opt into my world and you say, yeah, I like that story. I like that solution set to my problems. I want to learn more. Okay. So then when we talk about the deal, we're only going to get into the deal itself. And I'm going to send you an email with everything in it. And then it's purely binary. Okay. I like what Brian's doing. Cool. I've opted in. I'm on the distribution list. I got a deal. Cool. Let me take a look at it. Open it up 3 a.m. See everything I need to see. And then it's okay. I like it. I'm going to allocate X, or no, not my cup of tea. I'm going to wait for the next one. It's more efficient for me and for them. And I can tell you on the deals where I bring in 50 to sometimes 100 investors, I often don't do a single phone call. It's all email interaction. And when you talk about scaling your business efficiently, that's what I'm talking about, is your cost of customer acquisition not only from a time standpoint, from a dollar spend standpoint as well. Because if you're going to be in this business, you need to create a flywheel and a platform to efficiently raise capital. And that leads to the end here, right? Which is capital raising doesn't have to be super expensive or really time consuming. You can leverage public relations. You can leverage social media. You can leverage your marketing efforts to create a funnel and to have a magnet for like-minded people to come find you and then spread the good word. We went from 1,500 people on our contact list to 7,500 people in the last two and a half years. And it wasn't because I went out and had coffee with 6,000 people. Because I can tell you, when I first got into the business, I tried to do 5 meetings a day and 10 phone calls a day. And it'll work. I don't know how long you can do that for. I did it for 5 years, but it's horribly inefficient. You're much better creating really, really good evergreen content and being considered a thought leader and an industry expert, and then going into the deals itself. It's a much better use of your time. And I think that was 13 minutes. So I kept you a little bit long, but I'll press pause there. I'm happy to answer any questions you might have. And here we go. Established. What about if you're more established? How do you tweak this process? Yeah, so I still do this today with my investors, right? Either my current investors or my prospects. The best time to pitch is when you're not pitching. And what I mean by that is you call up a current investor or a really good prospect, or you have a Zoom meeting or a coffee meeting with them. Ask them what's going on in their lives financially, right? Understand the media they're digesting, the challenges that they're facing. I mean, right now, I can promise you, if they're a taxable high net worth individual, stock market feels really risky and expensive. Bonds are horrible, underperforming. Inflation feels very real for them because they're paying for healthcare, they're paying for education for their children, and they've probably moved houses over the last 5 or 10 years. So they're feeling that inflationary pressure and they need to find a way to release it, right? So all of those things, I'm constantly listening to my investors hear about, okay, what blogs are they reading? What podcasts are they listening to? What other investments are they making? What other managers are they looking for? What other niche strategies are they looking to learn? So that I can go out and create co-branded content and collaboration with other service and financial third-party vendors and service providers to continue to establish myself as a thought leader and industry expert and somebody they come to asking for advice. That's when you know you have a great relationship with an investor, is when they text you saying, hey, Brian, I really want to learn more about blockchain technology. Do you have any good resources? What do you read? Do you have any good managers? Do you have any other good investments or funds that you like? Right? That means that they trust you inherently. And that just makes that eventual conversion on the next deal that much easier. How'd you go from 1,500 people to 7,500 people? What is the best source of getting people into your qualified leads group? It's a great question. It's very hard to know sometimes how people enter into the funnel. I personally have found that the most efficient way to do that has been through webinars, podcasting, and our LinkedIn content strategy. We're getting about 3 to 5 new contacts a day. They're not all qualified leads, right? But some of them will be eventually. Unfortunately, it's going to be a situation where it's very hard to know exactly what channel is working the best for you. But the way to think about this is, if you want to create a piece of content, do it in a form where you can triple or quadruple that content in one shot. And what I mean by that is this presentation, right? Like, I put together this PowerPoint, but I did the PowerPoint and I videotaped it. And then I wrote a blog about it. And then I went on a podcast and talked about it. And now I'm going on a webinar to talk about that. right? So now I have one PowerPoint, but I've quadrupled my content channels through it. So you're going to have to keep spreading it around. And oftentimes people, it's almost a thing where people say, man, like Brian just keeps popping out in my world, my LinkedIn news feed. I heard him on a podcast the other day. Somebody referenced him on a webinar, and I just Google searched what is a SPAC, and his blog piece came up, right? So those multiple points of contact are at some point going to get them over the cliff. And you know you've got a good business when instead of you reaching out and grabbing people and dragging them in, they're asking to come in, right? That's when you know you have a real business, is when they're pushing to you and you're not pulling on them. And that's a constant dynamic that you're going to continue to play with. Did you ever let your investor network lead you into an asset class or market, or you try to source the best relative value deal? Yeah. So no, we absolutely listen to our folks, right? So for a long time, we were doing suburban office. And those portfolio, we have about a $250 million suburban office portfolio, and it's done really well. But pitching suburban office right now to individuals and families who are just getting crushed by the Wall Street Journal, the New York Times every day, that office is dead and everyone's working from home. And the metrics don't matter. That's what they feel, right? That's what their experience is. It's not worth pitching them an office deal right now. So you've got to be able to pivot. And so the last 2 years, we've been doing industrial, flex, medical. We've done a little bit of retail. And that's in advance or in direct response to what we're hearing from our investor base. Thank you. Do you ask for referrals? And if so, do you have a preferred method? Sorry, I'm trying to go from 10 potential investors to 100. Yeah. So your best conversion rates are going to be warm introductions. Like those are layup. If you get a referral from an investor who's current, 99% of the time you should convert that lead, right? Because clearly they've already talked. This investor has teed you up to this new relationship. And I mean, those are the best, right? They're very hard to get. It's a very hard ask. And that's when I have coffee with people or you talk to people on the phone, they say, well, what can I do to help you? It's a hard ask to say, well, hook me up with all your rich friends. Like introduce me to your 5 accredited investor buddies. That's very unrealistic. And so what I often will say is, listen, I just want to be a resource for you. So if you ever have an issue in the financial services space, in the professional services space, just reach out, because I've got an incredible Rolodex and a great network. And I just know a lot of people after doing this for 11 years. So if you just know somebody that has an ask, tee them up, like make an introduction. And that's where a lot of sponsors talk about how you need to be ruthless with your inbox and like very mindful of your time and the power of saying no. And sure, there's moments where you've got to like hammer down and get work done, or you're traveling. But I promise you, I've had more investors come through the door because I've said yes to weird things. Or when somebody reaches out and says, hey, I just want to have a quick phone call, or I've got a problem, or would you mind talking to my uncle or my cousin? They're looking for a job. They're in college. I don't care who you are. You've got 10 or 15 minutes to take that call, right? And I'm all about building up really, really good karma. And it's always come back to me. So one of the things that we've done is we created a capital club. I kept getting inbounded from my friends who had different niche strategies or were raising capital for real estate deals, et cetera. And they would say, hey, Brian, I'm doing this hotel development in San Antonio. Would love to talk to some of your investors. And, out of 7,500 contacts, I can't play matchmaker, even though I know that those investors, some of them probably would have appetite for this. So I just created a monthly Zoom meeting where you can come on, you can pitch your deal. I don't take any economics. I open up to my network of investors, LinkedIn, email distribution list, everything. And most sponsors and my friends said that I was crazy. that was cannibalizing my network, that my investors would hate it. And it's been the total opposite. Like, I think I've deepened the relationship with my investor base because I've allowed them to learn about music royalty rights, SPACs, leverage buyout, mezz debt, other real estate development deals, whatever. Those are the kind of things that you need to put yourself out there that will end up getting you the referrals. And it's a really good way to pitch a prospect without pitching them, right? Because you're just saying, hey, I've got these resources, come check it out. There's no ask. And those are the kind of things that can build the relationship over time. I answer calls and inquiries more than I reach out lately, so maybe the strategy you're recommending is paying off. Yeah, I hope so. I mean, you've got to be careful, right? But I think the power of yes is really good. Have you ever experimented with ads, LinkedIn or Facebook? So we've certainly looked into it, right? Like everybody, we've explored it. The conversion numbers are pretty bad. And the way that we've thought about it internally is, you know, how often do you see advertisings for Rolls Royce or Rolex? I mean, very limited, right? Very, very, very limited amount of the time. And so I would rather spend my time putting together really high quality content and knowing exactly where my avatar and my ideal customer profile are spending their time and leveraging that time and content as opposed to just hitting them up over ads. I'm not going to say that we would never do it. We just haven't done it to date. The numbers haven't really borne out that it's worth it, in our opinion. Have you ever convinced an investor who wasn't initially interested in real estate? Yeah, so this is a really good question, actually, from Gabriel. And for the recording, have you ever convinced an investor who wasn't initially interested in real estate to invest with you, or would you recommend only focusing on investors who are already invested in real estate? So this goes back to really understanding who your investor network is. So for us, the reason we didn't do multifamily, I'm guessing most of the people that come on here do multifamily, was my investor base already had exposure to multifamily. And they had done apartment deals with sponsors directly or through funds. And so my flavor of ice cream wasn't anything different. And so I was going up against really well-capitalized, well-experienced sponsors, and they had good track records, and my investors had good experiences with them. So I needed to have something a little bit different. And so that's one of the reasons that we don't do single family, we don't do multifamily, we only do commercial, is because there are many offerings out there in our network or community. And so obviously it's much easier when somebody understands the basics of how the real estate deals work, right? It's a different pitch because you're not saying, oh, we're going to buy this fee simple and this is what a cap rate is and this is what the yield is and this is what the leverage is going to be and this is the equity versus the debt, et cetera. This is the preferred return. These are the waterfalls. So that part of it is a little bit simpler because they probably understand those things. But I've certainly, people who have said, I'm not a believer in real estate. I don't understand it. The market's gone up 10% every year for the last 20 years. I've converted them. And those are the most, I won't say fun, because that's probably not the adjective I would ascribe to an investor, but I've converted people that I've pitched for more than 5, 6, 7 years sometimes. And you think they're not listening, that they've gone totally dark on you. And the next thing you know, they pop in your inbox, say, hey, I'd like to put 100,000 to work on this deal. Thanks for showing it to me. So, you've got to be consistent, and you've got to understand that families and individuals are just like you. They're crazy and they're very unpredictable, and they can be schizophrenic. So when they say one thing one day, it's not going to be the same thing they say the next day. You've got to show everybody every deal because you just never know. If you have a monopoly in your market, how do you go about leveraging the monopoly? Example, our group is one of the only groups in Canada. Yeah. Gosh, that's a really good question. I would say speed to market, right? I mean, I think you need to blanket that market. And it's really what Group RMC did in the office space, where they just dominated Canadian RIAs and high net worth individuals and family offices. And I think you've got to, it's going to be really hard to build a moat around that because other people are going to see. But I can tell you that biggest mistakes I made when I was building my business, not understanding that what I really was at the end of the day was a tech-enabled sales and marketing platform that offered people access to deals and not a deal person. So by that, I mean, as you've gained traction, and I'm on your distro list, so I know you've closed some deals, you really need to make sure that you don't fall into the trap of getting focused on just square footage or just AUM to compare with other people's square footage in AUM, because that's a loser's game. You need to make sure that you keep your GP business in really good shape. So that means doubling down on the investor experience and what the investor journey looks like, because I can promise you, after doing this for 11 years, talking to a lot of sponsors and GPs, if you take your investor relations, your marketing, your reporting, if you take it seriously and you put resources to work in those spaces from a time and money standpoint, you'll be a top decile operator sponsor in the space. Because most people don't take marketing and sales seriously. They just think it's a pain in the neck that they have to put up with to go and do the deals. So if you flip it, you're going to continue to do really well. I don't know what the numbers are in Canada, but in the US, about 13.5 million accredited investor households today. Less than 3% of them have exposure to private deals. So it's a wide open opportunity, in my opinion. Doing scaling models from large acreage resort settings from the ground up in another high demand. Okay. Yeah, I mean, Jay, reach out to me. I don't know much about that space, but if I can be helpful, just let me know. I'd be happy to connect with you. Sure. I put my email here and I'm sure it'll be in the show notes. Let's see, I'm trying to think. If you're going to pitch somebody who you don't really know that well, they're a prospect, take them to coffee or breakfast because it's the cheapest meal of the day. That was another good one that my mentor told me. I think those are all my pearls of wisdom. I don't want to take up too much of people's time. If there are any more questions or Stefan, I'm happy to do whatever.
Really awesome so far. And I was curious on the first bullet point that you have on utilizing public relations. So is that you refer to kind of building your personal brand in a way and kind of speaking to your avatar in this way, or what is the distinction versus the sort of the thought leadership platform that many operators talk about with regards to capital raising?
Yeah, I mean, the way I think about it is marketing is you telling your story and PR is other people telling your story. And PR can be really expensive. I know in the States, really, pretty good shops are going to charge you about $6,000 a month retainer. I hate retainer deals. Just not a huge fan, but PR is pretty much free if you're willing to put in the time and the effort. And you've got to remember that if you have a webinar like this, or if you have a podcast, or if you're influential on social media, you are a member of the media. Like, you now have bona fides. And in my experience, if you have a prospect who you really, really, really want to get in front of, and they're dark on you, or you just can't figure out a good introduction, there's no way to get in front of them. If they have a story that they want to tell them that you have a podcast, tell them you have 16,000 connections on LinkedIn and you have 7,500 people in your distro list, and you'd love to have them on the show to talk a little bit more about what you do and help them engage with your audience and network. You'd be surprised. That's a really good backdoor way to get in front of somebody and to build that relationship. Because now you've got that social capital that you can put to work. So, that's what I think about from the PR standpoint. Yeah.
So what's your personal brand? Let's say, how do you, if you want others to tell your story, what do you want them to identify you with? Let's say personally, like what has worked for you best? I know it's different for every person.
Yeah. So you know, for me, my personal brand is access and education. So I give individuals and families access and education to alternatives, to deals, right? Be that my own deals, be that my network of sponsors and GPs, be it through the Capital Club, be it through co-branded content videos, be through webinars, my podcast, etc. That's my brand. Front facing. Back of the house, it's about status for most people, right? And that's where I think a lot of sponsors get this wrong. Is I see people on LinkedIn saying like allowing individuals to, you know, free themselves from the 9 to 5 or freedom through passive investing. Like, I don't know who their avatar is, but if they're looking at accredited investors and those folks are making, you know, 200,000 to 2 million household a year, they don't need financial freedom. They want social status within their community, right? I mean, it's not necessarily about the deal. It's being part of the club.
So when you say, so they want, like your thesis being, they want social status in the context of, okay, they have the income yet growing their net worth, or also on the net worth side?
Yeah, like that investor says to their friends at the golf course or the club or their family friends, I've got access to these really cool, compelling opportunities that very few people can see because I know Brian.
Yeah, that's a really great point. So,
because
your point also being in a way a high income salaried person essentially may not necessarily want financial freedom. It's not necessarily the best thing they want.
And again, it depends on your avatar, but my avatar, ultra high net worth individual, family, maxed out tax bracket, maxed out 401k, like they enjoy working. They're probably very, very, very astute professionals that spend a lot of time in school to get to that place professionally. They enjoy working. I'm not trying to give them financial freedom. Like they could have it if they wanted. That's not what they want. They want to learn, right? They want not just access to the deals, but access to my Capital Club, access to my content, and access to me and my network and Rolodex. And I think what you realize is that is the realization that for the individuals and families, it's the investor journey and experience more than it is the investment. I was in Dallas last week at a family office conference. I had coffee with an investor. I'd never met him before. So I just said, well, I'd love to buy you a cup of coffee. And he's a high net worth individual. He's been investing with other sponsors. He's done deals through CrowdStreet, Real Crowd, whatever, been doing it a long time, right? Like knows the business. And I said, well, how's it been? Like, how's the experience been? We really would love to see if we could improve anything. And it's recent. So he's like, listen, you're making monthly distributions. Your reporting's good. I'm happy. But I'll tell you this, he told me, the thing that stands out to me is that after I invested, you wrote me a handwritten letter and you gave me a piece of corporate swag. Nobody's ever done that before.
It sounds like it's almost a social thing, right? It's kind of like being part of a club more so than, okay, offer these numbers, this IRR, etc. It's a really great point. It's really great.
Yeah. And so Vladimir's question about personal brands. So I'd push back on that. Your company brand is important, but people don't invest in companies on this level. They invest in people. And the other thing you have to remember, if you're going to be in this business a long time, is your personal brand is portable. Your company brand is not portable. Can't take it with you. But your personal brand will allow you to pivot multiple times or go into different asset classes or different industries. But if you only focus on the company side, companies fail. I mean, small businesses in America have about an 89% failure rate within 12 months. So be careful.
I agree. Yeah, that's another great point. There was a question before. Do you work with co-sponsors on multifamily deals? You don't work on multifamily deals, but and if so, or other deals with co-sponsors, and what number of unit size? Well, what number of unit size multifamily is your sweet spot?
Yeah, we don't do multifamily, and we don't allocate to other sponsors because we focus so much on our qualified leads and making sure that we have the exact investors that we want. I wouldn't feel comfortable putting economics on them in terms of their content information. They're the lifeblood of our business. I would never give them away to somebody else. And that's where you see with the crowdfunding websites have a lot of challenges, right? Is quality deal flow challenging. Friction cost, working with other sponsors and other GPs, challenging. And really those fees and those friction costs get passed through to the investor. So I don't know why I would want to do that necessarily. And that's why you're seeing the crowdfunding business models change. They're now becoming vertically integrated and having their own internal sponsors, which is what they should have done years ago, in my opinion.
So another kind of like online marketing, maybe technical question. So if you, as far as the podcast, okay, conversions typically are okay, podcast downloads, right? You have a webinar, you have like Zoom registrations, you have maybe your prior channels of marketing related to, and post channels of marketing related to that. In the case of your LinkedIn strategy, what has been most efficient for you to convert, and how do you get people on your investor list? You know, besides having the quality content, but what are the actual, you know, technical channels for that have worked for you?
Yeah. So we post twice a day, every day, including everybody on the team. So we curate, and that's where I think content creation is really hard, because you see a lot of sponsors creating content pieces or posting pieces about how hard they're hustling or using emojis and whatever. For me, the realization I've had talking to my investors is that they're inundated with information. There's way too much media exposure all the time, right? They go to the gym in the morning and they have Fox News or CNBC on. And then during the day, they've got Wall Street Journal notifications or Bloomberg News on. They got NPR on in the car. They go home. It's just like too much. And so I just help them curate. Hey, here's something that's really interesting that you need to take notice of, that otherwise maybe would kind of fall under the radar for you. And we post once in the morning and once in the afternoon, everybody on the team. And I don't see LinkedIn necessarily as a prospecting tool, although we do use it as such. I think of it more as, once you're in my funnel, you're seeing me pop up on your media feed a lot in a thoughtful manner. And it's reinforcing this brand and this concept that we're putting out there, which is we are industry leaders. We are thought leaders. You should take us seriously because we take ourselves seriously. And so we don't really look at it as a prospecting tool, although we certainly have brought in some investors through there. It's more, once you get into the orbit, it's a really passive way for you to learn about who we are, what we do, and how we think about things, if that makes sense. And I would definitely focus on just one social media platform. If you do it right, it's enough effort. I think it's really hard to do like TikTok, Instagram, and LinkedIn and Facebook and Twitter. You know, really get down with your avatar and your ideal customer profile and understand where they live. Maybe 2 social media platforms max if you can reuse the content through Hootsuite or one of these other applications, but it takes a lot of time and effort, and I would just go really deep into one. Yeah, LinkedIn has been the best for us for sure. That's where our people live. That's where they spend time.
You use anything besides LinkedIn as far as, you know, like thoughtful content, let's say, or
yeah,
that's
so
mainly where your audience is?
That's mainly where they are. You know, we try not to let anything go to waste. So if we do a webinar, if we do a podcast, we're going to create video content out of it, and we're going to leak it out over LinkedIn, probably with subtitles, because that gets the best engagement. And then we'll put the whole thing up on YouTube. We don't have a ton of subscribers or views, but it's free and we put it out there and it's evergreen. We've done some that have done well, but not so much others. So we always try to repurpose it, but I think it's really hard to boil the ocean. So I think you need to pick 2 or 3 things that you're really going to get focused on. And I would say that a realization I've had over the last year is we've done some really esoteric stuff, and it's cool and interesting. The things that drive the most website traffic and the most people enter into the funnel are like the blogs about what an accredited investor is or what industrial real estate is. It's like the super simple stuff. And I think what you'll realize is people are so scared to admit they don't know what we assume are simple things, that if you provide them a safe place for them to learn, that's the best way you're going to get engagement.
Yeah, that's really interesting. And so it sounds like would it be accurate to say that so you've been more involved in the sort of online marketing and capital raising this way through technology and like through online leads within the past, let's say 2.5 years, and then
Totally.
previously doing it in person with, let's say, for 5 years or so, doing it in person with, you know, having dinner with people, etc. So and you mentioned it was less efficient, that's kind of conceivable to imagine. That's easy to imagine in this space, in this sense. But what has been have you been actually able to capital raise substantial amounts before versus now? And like, what is the ratio and relationship between the two? Like, is it a 5x capital raising efficiency capacity, 100x for online versus in person? Like, what has been your experience from actually doing it so much and doing so many in-person meetings and how long did it take you, as a secondary question, how long did it take you to build your online channel once you decided to switch to that, sounds like?
Yeah. So here's, and I've thought about this quite a bit. I still think any relationship that's over $250,000, I need to meet that person face to face. We had somebody come in on a deal that we launched Friday for 1.5 million, first time investor. I need to go have lunch with that person, like, because clear is kind, ultra transparent communications, especially on the front end, is key to building a really good long-term relationship. And I think I've left more money on the table being so eager to take the money that maybe I wasn't as clear in managing expectations as I should have. And so now I'm very front facing with that. Hey, like, this is what you can expect daily, weekly, monthly, quarterly, annually. This is how we operate. This is who we work really well with. We're not the right fit for everybody, right? There are some groups that we're just not going to be a good fit for. Early in my career, I took the money early on and maybe wasn't as clear as I should have been. And you end up messing that relationship up when it could have been a much bigger one. And so I still think you can meet folks online, you can meet folks on Zoom, you can do that. But if you're really going to go deep, you need to spend time with them in person, in my opinion. And that's where I think you can really differentiate yourself. I don't think you can be totally virtual. That being said, once you get there, I think the re-ups and the conversions, once they're an investor, can happen much quicker. So for instance, historically, we would do 4 acquisitions a year. This year, we've done 5. We're under contract on 3 more. We're probably going to raise around 50 million of equity, which is about 4x a usual year for us, maybe 3x. And the fundraisers are happening quicker. Like this last deal we sent out Friday, the first 10 people that got it, 4 of them said yes, right? So we're getting better. Yeah, so they can, so Vladimir, they can commit over email or verbally, but before the deal actually transacts or they fund, you need to meet them.
So we have a few more minutes. So would you like to speak to the current kind of perfect deal profile that you seek, or like what you guys currently invest in? Do you have certain target metrics or sort of more qualitative factors, be it a specific IRR threshold or et cetera, if that's something you guys seek? And you mentioned you're doing more medical at this moment due to sort of like pivoting away from office, and a large office portfolio previously that you still hold. So what is your current deal profile?
Yeah, so the one we launched on Friday, urban infill location, Fort Lauderdale, Florida, a split between self-storage and shallow bay industrial. Smaller deal. So I think it's $7 or $8 million raise, 12% cash on cash, but with an immediate value add, some asset management things that you can do from an unsophisticated seller standpoint that immediately kind of convert to NOI. Those are stories that people really like right now, right? Sunbelt, demographic shift, super heavy cash on cash yield, and an asset class that they understand because they probably have a self-storage unit themselves, right? Or they live in a neighborhood where they see that these shallow bay industrial urban infill deals seem to stay full all the time, but that nobody wants to build new ones because nobody wants that in their backyard necessarily. And the medical story is an easy one too, right? It's demographics. The baby boomers are getting old. They need to go somewhere. They're willing to pay for it. Like really simple stories, I think, because people are really scared right now. And I saw a question earlier about high level trends I see in real estate technology. Everything's happening so fast that people are terrified. Politically, socially, technologically. No one really seems to understand what the Fed is doing, or Treasury, or these other central governments or central bankers. So telling a story and framing up the pitch that, hey, real estate has been creating wealth since the beginning of time. This is a very simple story. People are moving to Florida. They're old. They need medical care. Like, I think those are the things that are resonating really well, because most of the time they're getting crushed with meme stocks and crypto and DeFi, which are really exciting, interesting things, but they're scary, right? I mean, what's happening is really scary, the pace of change. And so we kind of try to take things and really simplify them for people.
That's been really great. And thank you, Brian, for really putting the time here for us. It's been incredible value to our community. And what is the best way for people to reach to you? It's really, we've had an amazing value, like a lot of questions answered. Thank you for this.
Yeah, connect with me on LinkedIn. I'm super active on it. Shoot me a note, drop me a message. We'll get a call in the books, or shoot me an email. You've got my contact information. I'm happy to meet and help any way that I can. Like I said, I'm really passionate about capital raising and marketing. I think it's the most underappreciated business, which is really cool, because if you're willing to take it seriously and study and try to up your game, like I said, most people hate the sales component of the business. So I think the more you embrace it and think about ways that you can make it more efficient for you and your investors, you'll have a great business. So hopefully it was helpful to some people.
Absolutely. Thank you so much. Thank you for joining us today.
Yeah, anytime.
Thanks everyone for joining as well. Have a good night.